Hi, and welcome to this week's Market Insights. We'll go over key events that could shake up the markets in the coming days. So let's get started. And we're going to start with Canada's GDP growth. On Friday at 3:30 p.m. GMT +2, Canada's GDP growth for Q4 will be released. Now, recently, the Bank of Canada raised concerns that ongoing trade tensions with the US could hurt Canada's economy. While US trade policy is uncertain, a prolonged dispute may slow growth. Now, earlier this month, President Trump agreed to pause trade escalations for 30 days. But what happens next remains unclear. Even though Friday's data reflects past conditions, it could influence future market moves. If the numbers disappoint, the Canadian dollar could well come under some pressure. In Q3, Canada's economy grew 1% annually, following a revised 2.2% in Q2. Now, on a quarterly basis, GDP rose 0.3%, slowing from 0.5% in the first two quarters. Weak growth pressured the Canadian dollar, making this report a must-watch for traders. Well, staying the other side of the pond, we've got the US PCE Price Index also coming out Friday at 3:30 p.m. GMT +2. Inflation is proving stubborn, and Trump's trade policies have reignited fears of stagflation. Now, that's a mix of slow growth and rising prices that haunted the 1970s. Even though markets remain optimistic at the moment about the president's growth agenda. Now, early this month, data showed consumer prices have jumped in January at their fastest pace since August 2003, bringing annualized inflation to 3%. While past stagflation fears haven't materialized, rising trade tensions and inflation concerns are keeping investors on edge. I think that's pretty clear. Now, if Friday's PCE report shows inflation higher than expected, markets could react sharply. Higher inflation might create uncertainty and impact Federal Reserve policy decisions moving forwards. Okay, time now to take a look at gold, and gold keeps reaching new highs as investors look for safety during these quite uncertain times. Now, last week, Donald Trump announced plans to introduce new tariffs within the next month or sooner, including tariffs on timber and forestry products. These will be added to duties on imported cars, semiconductors, and pharmaceuticals. Adding to market pressures, China's central bank has offered little policy support, and US-EU tensions over the Russian-Ukraine peace deal continue to grow. Now, so this week, stay tuned to those political and economic developments, as any unexpected news could cause big market movements, particularly in something like gold, which really is coming to the fore as a safe haven asset in the current climate. Okay, and finally this week, as we're in the middle of reporting season still, let's take a look at some corporate earnings statements. What about this week? Well, all eyes are on Nvidia's earnings, set for release on Wednesday after the market closes. The report will cover the fiscal quarter ending January 2025. Now, analysts are expecting earnings per share of approximately 79 cents per share. That would be a 61% increase year on year. Also looking for revenue in the region of $38.1 billion US, marking a 72% increase year on year. Now, earnings reports often drive market swings, as we've been seeing, so traders should pay attention to these and manage your risks accordingly. Well, that's it for this week's Market Insights. Stay tuned to Market Pulse on our website for more updates and more analysis. Thanks for watching, and we wish you luck in your trading in the week ahead. Bye for now.